Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, April the 24th. Sorry about yesterday missing out on the daily market commentary. My computer was driving me nuts all the way until today. Yesterday I couldn't even get my platform working because my computer shut down during the installation of new updates and caused a bug that I couldn't even get into the platform for the better part of the day because my computer kept shutting down. I didn't even have time to do that, but that's all fixed. That had something to do with my graphics cards not getting enough power, and I fixed that. So hopefully we won't have any more problems going forward here. All right, so without further ado, please remember that past performance of any trading system or methodology is not necessarily indicative of future results. And then we go on with the economic data. Something we missing yesterday, economic data wasn't the best. I mean, it was good, but it wasn't enough to really cause that massive rally that we had yesterday. I think that was more of a technical analysis, technical type thing. Yes, on media, they're always going to try and drum up something, but we'll talk about that here in a minute, how we saw that rubber band tightening up. All right, so yesterday we got Richmond Fed manufacturing came in at 3, was expected to be 10. That was lower than expected. One thing we did get that was nice was the new home sales coming in at almost 700,000, coming in at 692,000 units. It was expected to be only 647,000 units, so almost 45,000 more than what was expected there. And last month's number was revised, but only down by about 7,000 units. Wasn't a major 5,000 units. Wasn't a major move there. And then here in the United States today, we got a couple of things in the form of crude oil inventories we've got coming out later on today. We also have a Bank of Canada monetary statement, but for the most part, we're just waiting on this economic data to come out for crude oil. And with that being said, crude oil yesterday, we did get this nice rally in the markets. As you can see here, we popped up above this 38 Fibonacci that I've been talking about, thinking that we were going to kind of stop there. We did peel above that. That's good. We got some of those weak hands out early, but then late in the day, we got that sell-off below that 38 Fibonacci extension here, and now we're starting to see the market come off. We need to get below yesterday's low as a settlement for a confirmation to the downside. Anything above that is not going to be anything to write home about. So a confirmation, we need probably about another 50-cent sell-off would be nice to settle down $1 on the day. That would really kind of get that market to look like it wanted to roll over down to this area here, which is where I'm talking about that we need to kind of be for oil for a healthy economy. We start seeing oil start rallying too fast before this economy starts heating up, and that could really cause the brakes to get put on going forward. So we don't want to see that right now. We want to see lower oil prices so that we can create velocity money elsewhere. All right, then gold futures, they, yesterday with the big sell-off, they were seeing a flight to quality, I should say, because of safety is the gold, and that when they see the market start to take off, gold should start seeing money getting pulled out of it and putting into somewhere else where it's going to work a little bit better. So we saw that big sell-off in gold yesterday throughout the day. Late day rally today. Again, trying to decide what's going to happen, who's got the next shoe to drop, because the equities look like they may have shot their load on the upside. All right, bond. They're moving higher. The overall economic picture is still a little fuzzy, right? We see crude oil moving higher. A lot of people are probably thinking the same thing as me, is that could cause the overall economy to start slowing a bit more. That would create a more dovish FOMC. Remember, dovish means they kind of want to lower rates, and a hawkish move means that they want to raise interest rates because of staying away from inflation. Right now we're seeing the market move up. So remember, we have these levers and pulleys in the markets, and you can kind of think of the bonds as a teeter-totter, right? On one side you have interest rates, and then the other side you've got the price of the bond. As the price of this bond goes higher, so the bond pricing goes higher, we start getting this kind of teeter-totter. So the price goes higher, that means that the percent of what the interest rate goes lower. So it's always the levers and pulleys. You can think about it easily as the teeter-totter. And as this market kind of rolls over, if we saw the market come down, right, that means that the price went down. Well, if the price goes down, we have the levers and pulleys on our little teeter-totter, and we get interest rates going up. Okay, so that's how we kind of work with the bonds. It's kind of an easy way to think about it. You got your little teeter-totter like that to help you keep track of what interest rates are doing. So right now, we've got this market moving higher. The market's moving higher, and therefore interest rates are moving lower. Okay, pretty simple. All right, so bonds, trying to price in that the Fed is going to maybe even lower rates. You know, I've kind of been in the camp where we're going to stay sideways here, but the pricing in those bonds is trying to drive it to tell the FOMC, hey, we need you to either keep interest rates here, stop talking hawkish, or start talking dovish. All right, and VIX right now slightly in positive territory with the overall equities, like I said, trying to discern where they want to go. And, you know, I talked about this for about a week now, where we got stuck in this little trend area here, and it felt like that rubber band getting wound up. And once we kind of snapped out of that, we were going to see a big move. Yesterday is where we got that move. I didn't know if it was going to be up or down at that point, right? We don't know. We can just tell something is going to happen and looking for that snap happening, and we got the snap to the upside. NASDAQ slightly in positive territory again, but you know, I'm thinking that it felt like they really shot off too hard, too fast right now, creating all-time highs, almost like they just wanted to do it. Now we're starting to see the market consolidate up here, and it's gotten a little thin. All right, so if we had this doji like this and got the confirmation to the downside tomorrow, we haven't gotten any real discernible confirmations. You know, yes, people could say that this market yesterday confirmed to the upside. I'm not going to disagree, but the one thing that has me at a pause is the fact that we are really overextended. And we talk about this, when market gets overextended above the value area high and the value area low, that's where 80 or 70% of the transactions have taken place. You start getting this type of parabolic move to the upside, these guys are all dying, even especially if you're still in down here, are dying to cover up here. Okay, so we could start seeing some profit taking going on. That often causes the market to roll back over. E-mini S&Ps unchanged on the day right now, but similar chart pattern as you can see here. Let's go over to the daily chart. This is the each candle is a 30-minute section. Each blue like this is a day session. And what we've been seeing was that we were getting this kind of area right here where, sorry, I want the wrong one. This area right in here where we were seeing this consolidation, where I was talking about that's winding up this rubber band. We start getting this tight markets and we wind up that rubber band. Once we break out and above that, we start seeing this type of snap happen where the market just gets those shorts on their heels and the market really starts rallying. And now we're starting to see that top happen where these guys that are the weak hands are starting to consolidate overnight. You can see that market got probably a little short overnight inventory, covered those boys out, and I'm thinking that the market's going to kind of stay inside day in and around this point of control, yesterday's point of control. Value area highs, value area lows, I expect to stay relatively close to where we are now. It might move higher. This value area high might move higher to this area. That would probably be a good thing if we are bullish. You'd want that value areas and point of controls to continue to step higher and higher as we go. I'm expecting this snap to kind of roll back over a little bit, you know, talking my position a little bit, but I think that the market has just really seen too much of a upward trajectory move without any major covering. Okay, so people are dying to cover trades, and once that starts happening, we start seeing this snowball. So I think that that's what we're going to start seeing throughout this week. All right, a couple of trades I'm looking at for earnings. I haven't done anything in my overall portfolio. Han is causing me some fits. It broke above where my break even is, but I think that it's kind of gone too far, too fast as well. It's starting to see some volume really thin out up there. So I think that we're going to see Han come back. That's the only one I'm super concerned about in my portfolio right now. But going forward with earnings, we've got a lot going on. We've got Facebook, Microsoft, PayPal, Visa, Tesla, Freeport-McMoRan, Altera, and 3M, all basically between tonight and tomorrow morning. I'm mostly going to be looking at Facebook, Microsoft, Visa, PayPal, and Tesla. Those all come out after the close today. But with that being said, the ones that I'm really gravitating towards are Microsoft. Now, Microsoft, if you guys keeping these esports in mind, okay, we have Fortnite. That's the big one. Fortnite is the big game everybody's playing right now, and that is an Epic, and it's a private company, so you can't get into that. But we have PS4, right? PlayStation 4, and we also have the Xbox. All right. Now, there's a couple of things going on. PlayStation 4 was losing market share to Xbox because on Xbox you can change your name, and we have these kids that are creating different. These kids are creating little clans or groups where they have their team and they go out and enter into these different championships things. Well, PlayStation, you can change your name. So when you go to a different group, if I get better and I can go to a better group where they have a lot of champion level guys or whatever, I can easily change my name to whatever they are. Xbox allows that to happen. PS4 didn't. Now PS4, I think, is getting a little bit more lenient with changing the names, which is a good thing because they were losing market share. People want to change their name, they're going to go to Xbox. Now the thing I'm hearing right now is that people are switching from PS4 and going to Xbox because the controller, there's, these guys are all concerned about latency as we are as traders, but they are on the controller aspect. So the controller seems to be a little bit funky with the PS4. I don't play either one of them, but I have one son that has a PS4 and one son that has an Xbox, and my PS4 son tells me all the complaints, and the Xbox son tells us all the beautiful things about Microsoft. So with that being said, I'm playing Microsoft to the upside because I think that Microsoft is losing share to PlayStation, so that's going to show up here pretty soon. All right, and then so I'm playing Microsoft to the upside. Visa, I'm also playing to the upside. Yes, it has gone well over and above the value area high right here. As you can see, one would expect it to be overextended to the upside, but you can see we're starting to gain acceptance up at these levels. It doesn't mean that we're not overextended, but we're not getting a thin tracer like we see down here with no volume on this sell-off, okay? And then that's what caused the market to set back higher, right? That's when we get the overextended. But up here, we're seeing price being accepted for Visa. And they always have a tendency to beat on earnings. I think out of the last year and a half, I've only seen one earnings miss, and they still pretty much rallied on it. So again, playing Visa to the upside. So those are the two I'm sure about. With PayPal, Microsoft, Tesla, I am not as whole on directionality. So Tesla is another one I love to trade on, but it's pretty low, and I really don't have a discernible direction on this. I've seen a lot of Teslas around lately, a lot of people talking about it, so they could get a nice boost and beat on earnings again. So I'm going to stay away from Tesla most likely, unless it's a final hour change of heart. Okay, that's all I got for you guys today. But check it out. Follow me on Twitter at Wolfman's blog, because I will be tweeting out what I have done with these Microsoft and Visa. I'm not going to give the strike location. That's up to you to know where they are, because you know from my earnings webinars where my strike location is for these type of trades. All right, that's all I got for you guys, other than if you can't take that, take it easy.